But this is where trading starts becoming real. Not the version you see on Instagram. Not the version people flex on Twitter. Not the screenshots. Not the rented Lamborghinis. Not the fake lifestyles designed to sell you a dream. I mean, the real version of trading. Because when you actually sit in front of the charts every single day for months, and eventually years, you realize very quickly that trading is one of the most psychologically demanding things a person can do. Most people only show you the highlights. They show you the winning trades, the huge percentage gains, the payouts, the luxury watches, the moments where everything worked perfectly. But what they never show you are the thousands of hours spent alone staring at charts in silence. They don't show you the moments where you question whether you're even capable of succeeding. They don't show you the nights where you replay losing trades over and over in your head wondering what you missed. They don't show you the frustration of following your system perfectly and still losing money. And they definitely don't show you the emotional pressure that comes with putting real money on the line every single day. That's why, after almost a decade in trading, I genuinely believe this. Trading is first a psychological game. Only after that does it become a strategy game. Because strategy alone is not enough. You can have the best entries in the world. You can understand technical analysis perfectly. You can know market structure, liquidity, Fibonacci, fair value gaps, support and resistance, options flow, macroeconomics, all of it. And you can still lose everything if you cannot control yourself. That's the part nobody wants to hear. Because people love the idea of making money. But very few people are willing to confront themselves emotionally. And trading forces you to do exactly that. For example, imagine this. You wake up early. You analyze the market. You patiently wait for your setup. Everything aligns perfectly. You enter the trade. Your stop loss is placed correctly. You risk only 1%. At first, everything feels calm. Then suddenly, price starts moving slightly against you. And probably one of the most dangerous things social media creates for new traders is FOMO, fear of missing out. The fear that you're missing an opportunity. When you first start trading, it's almost impossible to avoid this feeling. You open your phone and see other traders making thousands of dollars in just a few hours. You see profit screenshots. You see payouts. You see captions like, made 10K before breakfast, caught the entire move, easy money. And whether you want to admit it or not, a part of your brain immediately starts thinking, I'm falling behind. Why are they making money while I'm not? Maybe I'm not good enough. Maybe I need to trade more. Maybe I need to risk bigger. And that's when your psychology starts becoming extremely dangerous. Because instead of focusing on the process of building skill, you become obsessed with trying to catch up to other people. You stop looking at charts logically. You start looking at the market emotionally. Every pump in the market feels like you're missing something. Every time you see someone posting profits, you feel pressure to enter a trade. And this is where many traders begin destroying their accounts. They start increasing risk. A setup that should normally risk only 1% suddenly becomes a 5% or a 10% risk trade. They jump into entries before confirmation because they're afraid price will run away without them. They revenge trade after missing a big move. They begin trading not because the setup is good, but because standing on the sidelines feels emotionally uncomfortable. At that point, it's no longer trading. It's emotion controlling every decision. And ironically, FOMO becomes strongest right after you see other people succeeding. But you have to understand something extremely important. Social media only shows you the final result. It does not show you how many losing trades came before that, how many blown accounts, how many years of struggle, how much pressure exists behind those numbers. You are comparing your behind-the-scenes reality to someone else's highlight reel, and that is a game you will never win. I made this mistake many times when I first started trading. There were days where I had absolutely no setup. The market looked terrible. There was no real edge. But then I would open Twitter or Discord, and see other people posting massive winning trades. Immediately, I would start thinking, maybe I'm missing something. Maybe I should enter a trade. Maybe there's still an opportunity. And most of those trades ended the exact same way, with losses, because I wasn't entering based on my system. I was entering based on emotion, and that is a massive difference. A professional trader enters because their setup appears. An emotional trader enters because they don't want to feel left behind. That's why you must learn how to completely detach yourself from the noise of the internet. Because in trading, another person making money today has absolutely nothing to do with your system, nothing to do with your edge, nothing to do with your plan. Every trader has different risk tolerance, different experience, different psychology, and different strategies. The only thing you truly need to focus on is whether or not you are properly executing your own process. And this is the lesson I wish I learned much earlier. The market will always be there. There will always be another opportunity, another breakout, another trend, another trading day. But if you lose emotional control, you won't have any capital left to take advantage of those opportunities. That's why great traders do not try to catch every single move. They do not try to trade every day. They do not try to prove anything to the market. They simply wait patiently for the right opportunities that align with their system. And sometimes, the greatest skill in trading is not knowing when to enter. It's knowing when to stay out and do absolutely nothing. Nothing dramatic, just a small move. But immediately, your emotions begin speaking. Maybe I entered too early. What if this trade fails? Maybe I should move my stop lower. Price will probably come back. I don't want to lose. And in that exact moment, trading stops being technical. It becomes emotional, because now the real battle is no longer between buyers and sellers. The real battle is between you and yourself. And this is where most traders begin destroying their own systems. Not because the strategy is bad, but because emotions slowly take control of decision-making. This is how accounts blow up, not usually in one giant trade, but through hundreds of small emotional decisions repeated over time. Moving stop losses, over-leveraging, revenge trading, entering out of boredom, breaking risk management, forcing setups that do not exist, all because the trader cannot emotionally accept being wrong. And this is one of the hardest truths to understand. The market does not care about your opinion. The market does not care what you want. It does not care how confident you feel. It does not care that you need this trade to win. The market only moves based on supply and demand, nothing more. And if you cannot emotionally accept small losses, eventually those small losses will turn into catastrophic ones. That's why one of the biggest mindset shifts I ever had was learning to treat stop losses as a business expense, not as failure. That changes everything, because think about it logically. A restaurant owner has to pay rent. A company has to spend money on marketing. A warehouse business pays for inventory. Every business has operational costs. And for traders, losses are simply operational costs. That's it. A losing trade does not mean you are stupid. It does not mean your strategy suddenly stopped working. It does not mean you are a failure. Sometimes it simply means probability did not work in your favor on that particular trade. That's all. And once you truly understand this, your entire psychology starts changing. You stop obsessing over being right. You stop taking losses personally. You stop trying to predict every single movement. Instead, you begin focusing on the only things you can actually control: your execution, your discipline, your risk management, and your consistency. Everything else is probability. And that is one of the most important concepts in trading. Trading is not a game of certainty. It is a game of probability. This means you can execute a trade perfectly and still lose money. And you can execute a terrible trade and still make money. That's what makes trading psychologically confusing for beginners. Because in normal life, we are taught that good decisions equals rewards, bad decisions equals punishment. But trading doesn't work that way. Sometimes good decisions lose. Sometimes bad decisions win. And if you do not understand this deeply, you will start reinforcing terrible habits. For example, a beginner breaks every rule, over-leverages a random trade, gets lucky, and wins huge. Now the brain gets rewarded for bad behavior. That is dangerous. On the other hand, a disciplined trader follows every rule perfectly, takes a statistically valid setup, and loses. Now emotionally it feels unfair, but in reality, the disciplined trader is the one building long-term success. This is why professional trading requires emotional maturity. You must judge yourself based on process, not individual outcomes. And honestly, this is extremely difficult because humans naturally crave certainty. We want guarantees. We want control. We want immediate rewards. But trading gives you none of those things. Instead, trading forces you to think in probabilities over long periods of time. And that requires a completely different mindset from normal life. This is also why consistency matters infinitely more than occasional big wins. Anyone can get lucky for 1 week. Anyone can hit one massive trade, but very few people can stay profitable for years. And long-term profitability almost always comes down to discipline, not intelligence, not secret indicators, not hidden algorithms. Discipline, the ability to repeatedly execute the same process regardless of emotions. That's what separates professionals from gamblers. A professional trader does not wake up trying to make money today. That mindset alone is dangerous. Instead, they wake up looking for high-quality opportunities where risk is controlled and probability favors them. Some days, those opportunities appear. Some days, they don't. And that leads to another lesson beginners struggle with. Not trading is also a position. You do not need to force trades every day. In fact, one of the hardest skills in trading is learning when to stay out of the market completely. Because sometimes the market conditions are terrible, choppy, random, low volume, no clear direction. And entering trades during those conditions simply because you feel bored is one of the fastest ways to lose money. I learned this lesson the hard way. When I first started trading, I thought success came from working harder than everyone else. So I spent endless hours staring at charts. I thought more screen time equals more money. But eventually I realized something important. More trading does not equal better trading. In fact, overtrading is one of the biggest account killers in the world. Because when you sit in front of charts too long, your brain starts inventing setups that are not actually there. You begin forcing trades. You start seeing patterns everywhere. You enter simply because you feel like you should be doing something. And usually, those are the worst trades possible. One of the most powerful skills I ever developed was patience. Real patience. The ability to sit still and wait for price to come into my zones instead of chasing the market emotionally. That changed everything for me. Because trading is much closer to being a sniper than a machine gunner. You do not need 50 mediocre trades. You only need a few high-quality opportunities executed properly. That's how professionals think. Every morning, my process is simple. I open the charts. I analyze higher time frame direction. I identify key liquidity levels. I map out potential reactions. I identify where structure could break. I define invalidation points. And after that, I wait. Sometimes for hours. Sometimes nothing happens all day. And that's okay, because forcing trades destroys consistency. This sounds simple in theory, but emotionally, it is incredibly difficult. Humans hate inactivity. We are conditioned to believe action creates results. But in trading, unnecessary action often destroys results. Sometimes doing nothing is the highest level decision you can make. Another major mistake beginners make is trying to learn too many strategies at once. This is a huge problem today because the internet floods people with information constantly. One day, someone says, supply and demand is the key. The next day, someone says, ICT is the answer. Then someone else says, indicators are useless. Then another trader claims order flow is everything. Soon, you are learning scalping, swing trading, options, crypto, futures, Forex, smart money concepts, Elliott wave, market profile, volume analysis, algorithmic trading, and eventually your brain becomes overloaded. You know a little about everything, but you master nothing. Meanwhile, most profitable traders become exceptional at only one or two things. That's it. Some traders only trade pullbacks. Some only trade breakouts. Some only trade New York Open. Some only trade one asset, and they repeat the exact same process thousands of times until it becomes second nature. That's when trading evolves from emotional gambling into professional execution. Another huge mistake I made early on was focusing too much on money. Every trade felt emotional because I constantly calculated profits in my head. If this trade works, I can make this much. If I size bigger, I can make more. That mindset is incredibly dangerous because once money becomes the focus, emotions explode. Fear, greed, hope, FOMO, everything intensifies. And emotional intensity destroys clarity. Eventually, I learned something important. Professional traders do not focus on money during execution. They focus on process. That's why many traders think in R instead of dollars. 1 R simply represents 1 unit of risk. Maybe for one trader it's $50. For another, it's $5,000. It doesn't matter. What matters is consistency of execution relative to risk. Because when risk remains controlled, emotions remain manageable. But when traders risk too much emotionally, logic disappears completely. Now, every candle feels life-changing. Heart racing, checking P&L every minute, unable to sleep, unable to think clearly. That is not trading. That is emotional gambling disguised as trading. A professional trader must become emotionally neutral, not euphoric after wins, not devastated after losses, calm, balanced, objective, and reaching that emotional state takes years of experience, which is why I always tell beginners, start small, much smaller than you think. Do not focus on becoming rich quickly. Do not focus on luxury lifestyles. Focus on building skill, because skill is what creates freedom long term, not luck. Luck can create temporary success, but only skill creates consistency. And skill comes from repetition, studying charts for thousands of hours, backtesting relentlessly, reviewing mistakes honestly, tracking data, journaling emotions, improving slowly over time. That process is boring to most people, which is exactly why most people fail. Everyone wants the result. Very few people want the process, but the process is everything. That's why journaling became one of the most important habits in my trading career. After every trade I record why I entered, why I exited, what I felt emotionally, whether I followed rules, whether I respected risk management, what I could improve. Because if you do not track your behavior, you cannot improve it. Your journal becomes a mirror. It exposes patterns you cannot see emotionally in real time. You begin noticing revenge trading, fear-based exits, greedy entries, discipline breakdowns, emotional impulsiveness. And honestly, this is why I believe the hardest part of trading is not technical analysis. The hardest part is self-awareness. Trading exposes every weakness inside you. Your impatience, your ego, your greed, your insecurity, your need for validation, your inability to control impulses. The market amplifies all of it. And that's why trading changes people so deeply. Because if you stay in this game long enough, you are forced to evolve emotionally. You are forced to become more disciplined, more patient, more self-aware, more emotionally stable. And ultimately, after everything I've learned, This is probably the most important thing I can tell anyone starting trading. Trading is absolutely learnable. It is not magic. It is not talent. It is not luck reserved for a special group of people. It is a skill, but it is a difficult skill. And like every difficult skill, it requires time, repetition, failure, adaptation, and emotional resilience. There will be moments where you doubt yourself, moments where nothing seems to work, moments where you question whether you are wasting your time. That is normal. Almost every profitable trader has experienced that phase. The difference is that successful traders keep improving through it instead of quitting emotionally. So do not rush the process. Learn deeply instead of endlessly. Master simplicity. Build one solid system. Risk small. Stay disciplined. Focus on execution. Think long term. And over time, trading slowly transforms from something emotional and chaotic into something structured, calculated, and repeatable. That is when everything changes. Not only your trading account, but your entire mindset. The way you think, the way you handle pressure, the way you control emotions, the way you approach risk and uncertainty in life itself. Because at the end of the day, trading does not just teach you how to make money. It teaches you how to manage yourself,